CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Welcome back. Just two stocks that I want you to take note of. One of them is Hexaware, which is down nearly 4%. They had their conference call today in the morning, and basically the company is saying that Q4 will see regular furloughs. Companies are shut, etc. So that will have an impact of 250 to 300 basis points. There is also an additional headwind because of the US government shutdown, and plus because the company has not been able to do visa transfers on account of the H-1B headwind, there has been some impact. So on the whole, the company is saying that Q4 growth will be on the flatter side, though they're a lot more optimistic about calendar year 2026. But this commentary perhaps has put some pressure on Hexaware. And the other one is L&T Finance, because yesterday the company held their investor day, and they've set a target for the next 12 to 18 months where they are driving a 20 to 25% risk-calibrated AUM growth. And they're planning to achieve an ROA of 2.8 to 3%. So that stock is on the rise. But moving on now to Manisha for a quick handle on what's happening in the world of cryptos. Manisha.
Well, on Crypto Corner today, we talk about the crypto custody services. Well, this is a secured third-party services that manages and store digital assets. Well, it does safeguard private keys for institutional investors like the hedge funds and exchanges. It acts also as a digital vault. It does provide institutional-grade security solutions such as multi-signature technology there. It also does provide cold storage and hardware security modules to protect against theft and also loss. Beyond safekeeping, there are other services that custodians also provide, and these are analytics, trading, pricing and settlement as well. But it does help the regulatory requirements as well, so that is something that you don't have to bother about also. So when you look at the major examples within that space, it does about Coinbase custody, Gemini and also BitGo are some of the very important and credible ones. Well, it is important also because it helps risk mitigation. It also helps institutional adoption, and then there's a lot of convenience to this as well. Also, when you look at the crypto wallet side of it, it is a digital tool that manages the public and private keys. So keys are needed to access and transact with your cryptocurrency holdings on blockchain, and these are the keys that you can safe keep in many of these wallets. A wallet does not store your crypto or on blockchain. It does store your key though, and if you forget that key number or that wallet password, then it is all lost, and there have been various instances for that as well. So that is one thing to keep an eye on. Apart from that, the wallets also allow you to send, receive and manage your assets. There are various types of wallets as well. One, of course, is custodial. This is, as we've just talked about, it's a third party like an exchange, and it tools and manages your private keys. The other one is self-custody wallets. In this case, it is not the third party, but it is you or itself who is maintaining your wallet. So you are the one which is completely in charge of storing, protecting when it comes to your own private keys. As far as security part of it goes, well, that relies on strong cryptography, and without your private keys, you can permanently lose access to your funds. So as I said, keys are the most important, and the password is the thing to access, trade and own your cryptos there.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.